Good morning, guys. How are you doing? Vlad here with a new video, something that I found very interesting going through ICT's 2025 lecture series um, that will probably help you to trade better in London and overall during the New York session as well, because these things they carry over into the New York session. And it's a video. I'll leave the link in the description to ICT's video where he explains it in detail. It's an hour long. It's a long watch, but it's definitely worth your time. So I'll try to summarize it very quickly. Share my insights on it because he shares how he is finding the high or low of the day using the midnight range, but doesn't really give a lot of insights into it. And I wanted to do a case study on it, and that's why I'm making this video now, so you can go on your charts, check it for yourself, see what you think. I personally find it quite powerful, and it helps me find some consistency during London in the past few days since I discovered it. So, what is the midnight range? The midnight range is the range from midnight. Let me remove this for a second. The midnight range, we're on the 5-minute chart. Let me go on the 1. So this is the price action from yesterday. Your midnight range is from midnight open, so that will be this candle here, like this, and let me do it like this. Midnight open until here 12:30 a.m. So that will be from midnight, so 12 a.m. to 12:30 a.m. In this range, what you want to do is find the lowest and the highest point of the range. So that will be the midnight low here, and here the top of the range will be this candle at 12:17. You want to measure this range like this. You want to put the quadrants on it, so 0.25, 0.5, 0.75, just like grading any other range. So there's going to be a lot of price action within that range during the initial delivery post midnight. You also want to find the largest displacement that happens in that interval of time. So during the midnight range from 12 to 12:30 a.m., you want to find the largest displacement. So it's this one here. I already marked it in purple. And this displacement will be used for the daily delivery, for the London delivery first, but also on the daily. So you see how ICT, again, the video, he'll show also that you can grade this range the same way. So I'll just show you. Let me remove the other one for a moment. Sorry. So you can see here how price will deliver first within that range. See, from the top of the displacement to the lowest, to the low of the range, then back to the midpoint of the displacement. Then it's going to break out of this range. It's going down to midnight open, then goes back to the range. And when we have the midnight range, you also, this largest displacement within the midnight range, not only you grade the quadrants, but you also want to add 0.5 and 1 standard deviation. I actually added 1.5 here as well to my FIB. But generally speaking, if it's a larger extension day, price will generally, when you're using the open, high, low, and close rule, if it's a bullish day, it's going to go open, low, and then high. So this open, low, initial manipulation down under midnight price will go around 1 standard deviation, and then it's going to reverse. Of course, there is rules to that. And you have to watch price action. You just don't trust it blindly. It's not going to happen every single day, but it's a general rule of thumb. Okay. So you see how price is using this range of this displacement, but more importantly, as we said, you want to find the high and the low of the midnight range. I actually found a very nice indicator about it. So I'm just going to plot that on the chart using the indicator, where you can add your standard deviations, as many as you want, up to, so this is the midnight range standard deviations, and you can add up to 12 standard deviations here, both up and down. Okay, it's going to automatically find the high and the low of the range, and it's going to plot it for you. So once you have all this information, then you start watching price. You see, price is initially working the range that's bound to this displacement here. Then it goes down. See, 2 o'clock, that's the kill zone, London kill zone, goes down. And it goes, wait, it's more visible on the 5 minute. So let me do, because you can see the standard deviations here on the 5 minute. So that's your midnight open. So 2 o'clock, it goes down to 0.5 standard deviations and then to 1 standard deviation. Okay. Then it starts consolidating around these levels. So from half standard deviation to 1 standard deviation. Then it's there is a small SMT here between these 2 candles and these 2 candles. You see here. It's more easily distinguished on the 1 minute, but it is an SMT on the 5 minute as well. See, and usually for the reversal profile, for London reversal, your sweet spot is 330. Okay, 330 is the reversal macro, if you want, and it's gonna. Then you watch for price to shift market structure and then start spooling up. Okay, by 4 o'clock macro, you will have your fair value gap entry to go long here. Okay, now first of all, not only it goes 1 standard deviation down, which is ideal, In that case, it can go further down, of course, but we have further confluences here. We have relative equal highs here at the top of the midnight range. We have relative equal highs here and here, top of Asia. Okay, so all this is telling you, because it's smooth here, that this here is very likely to deliver bullish. Why? Also because, look at this, market structure shift happens at 3:30. So that's your, as ICT calls it, your golden ticket. Okay. And then this is how you catch, using the open, low, high and close, you can catch an enormous expansion. Look at this, all the way up. 8:30 news goes further up. 9:30 open, we go further up. See? In this way, you can catch the low of the day or around that level for a huge, huge expansion. So you have open, low, high, and close is here. Okay. Okay, guys, another thing I wanted to show you as well, if you go on the 1 minute, is how we used this displacement of the midnight range. Remember, the largest displacement that happens during the midnight range, marked in purple. So once, this is the S&T, by the way, once price started, see, market structure shift at 3:30, then we go up here, here. This is your 4 o'clock fair value gap, macro time, when you can position yourself to catch the daily range or the large portion of it. Okay. But anyway, what's interesting is how we use this displacement, the largest one from 12 to 12:30 a.m. Cast it forward, and you see this. We trade through it here at 4:20, then go back and just wick through it, test it so many times. This is the market accumulating here. Okay, the market accumulates. There is one thing that ICT taught yesterday, how to trade conservatively his inversion fair value gaps. So let me quickly share with you. So how you trade conservatively inversion fair value gaps is you wait for price to displace out of them first, then it should go back to the fair value gap, fail to close below the gap, and then displace again out of the gap. And that second displacement, which should form immediately after the gap, this is your ideal entry if you're bullish. So that if it's an inversion CB, if you're bullish, that's going to be your ideal long. If you're bearish and that's an inversion BC, that's going to be your ideal short. So this is a CB here, marked in purple. Remember, the largest displacement from 12 to 12:30. So we expect it to act as inversion. What do we see here? Price closes first above this CB. Also, look at the characteristics of this CB. There is a volume imbalance on the bottom of it, and there is a volume imbalance on the top of it. See here, when we traded up through it with this green up close candle, we left another volume imbalance at the bottom. Then we traded down with full body closure. Then again up. So this range now becomes a balanced price range. Why? Because there is full bodies going through this CB in both directions. Okay, so this means that this range is now balanced. And when you see price doing this here in the balanced price range, see, once again, full body closes, up and down, up and down. This confirms this range is now balanced, and we don't want, and we are not going to trade further down. If it wicks through it, you know, that's just a wick. It's just doing damage. It's just doing damage. The wicks do the damage, but we don't expect bodies to trade down here. And when you see bodies stay inside of this CB, which will act as inversion now, you wait for this same technique that Michael mentioned yesterday to trade it. So initially we displace up. This is your displacement here. See, fair value gap or a BC here. So we have a close above the CB, displace up, then we go back down to test it. Okay, price starts accumulating within the CB. Then here, look at this. Here, this candle at 436, it fails to go down to the bottom of the CB. Then the 437 fails again to close the CB or trade out of it. Then again 438 fails to trade out of the CB and displaces up. Immediately, the displacement is formed immediately after we leave that CB for the second time, and we fail to deliver the low of the CB. So this here, this fair value gap is your long. Okay, this fair value gap should not fail. Okay, so this will be your long. See this? If you cast it forward, see how perfectly we respect this. We don't go back to the midnight displacement. Price perfectly respects this BC. And then, see here, at 510 macro, we reach this BC, and price then accumulates before starting to displace at 530 up. So this is, if you miss the 330 golden ticket, this is the next station where you can catch the larger portion of the daily range delivery. So here we start going up, and this is how you use it. Okay, 830. See, we never trade back into it. And if you see here, in terms of market maker models, so you have the market maker sell model here at 10 o'clock. The market maker sell model, when you're trading it, you want to identify your original consolidation that you will be trading towards. Okay, this is your original consolidation. So the way Michael explains it, how to identify it, let me mark it in gray. The way Michael explains it, you want to catch candles that are pretty much on the same level or at the same level. Look at this. The bodies here stay the same, how they respect this level. This candle, they're all closing pretty much at the same level here. Okay. This wick through it, we don't count that. The same at the bottom. See? Here. The bodies of these candles here, here, and here. This is your original consolidation. If you cast that forward, you can see how your market maker sell model from 10 o'clock here, 9:40 it starts, then it continues through 10 and 11 all the way to lunch, 11:30. We go back to the original consolidation. According to the market maker model rules, price doesn't have to trade below the original consolidation. That's not required. Trading to the original consolidation is enough for market makers sell model or buy model to be complete, and then the market can reverse. So that's exactly what it's doing here. It is doing it when at 11:30, when your launch macro starts. I spoke about this many times. Launch macro usually delivers against the people who made money in the morning. So back to the original consolidation, which happened, by the way, where right above the midnight range, where you also had this displacement of the midnight range, the largest one in purple. See, back to the original consolidation, and then goes up. So all these little tiny details are things that you want to be paying attention to. Okay. So just wanted to show you a couple more examples which happened in previous days. So you have here last Friday, where we have open. Where is midnight? Here. Price goes down. It goes down 3 standard deviations. Okay. Look at this candle. It's, what time is it? 3:30. Golden ticket, as ICT calls it. And what happens then? Woohoo! We go up and up and up and up and up to here. 3:50 p.m. when we reach the top of the daily candle. Okay. Going to the previous day. Midnight open here. We have low 1.5 standard deviations, 4:15. So the 4 o'clock macro goes up back to new day opening gap. Right? And then it reverses 8:30 back to the mid gap and to this CB. 9:30 here starts going down, testing one more time the new day opening gap, and then starts to deliver down. Okay, look at this. When it was reaching up here, until 6:30. It went 1.5 standard deviations up before starting to go down. So, yes, here we had a double manipulation. So we had an open, low, high, low, and close. And this will happen. This will happen. The London reversal profile didn't also happen at 3:30. At 3:30, we were back into the midnight range here. So this is worth studying, this piece of price action. Let me just show you one more. Here, previous day. We have open, low, look at this, 320, 330, manipulation down to 1 standard deviation, and then go, 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 baby. Here, 830 goes, let me just see, I'll just plot the others. No. Goes 9 standard deviations up before dropping down. Okay, so open, low, high, and then the rest of the day goes on. Usually, if you can catch it here at 3:30, by 8:30 expansion, you will have a massive range. You don't need to hold anymore. And if you want to hold anymore, you need to know where price is going. You need to go on the daily. You need to know where it's going to reach to. See here, this previous high when we took it, how price was hesitating here, accumulating. Okay, when you see accumulation above all highs, that usually means a deeper retracement is coming. Okay, but this is discussion for another day. Let me try to do one more here. We have open. Look at this 3:30. We are still inside the midnight range. Then we have high, 1 standard deviation. That's very good. And then at 5 o'clock is the end of London, beginning of so-called London lunch between 5 and 7, or the New York pre-session. Okay, it's time of day when several sessions overlap. So 5 o'clock, price starts going down, back to the midnight range at 7. Then we go back up to 1 standard deviation, and then down, another manipulation up, and then down. But so that's 10 o'clock when we start going down. But knowing that from midnight we didn't go low to explore any lows below the midnight range, you can assume that all this price action that happens above the midnight range, that's your open high manipulation before delivering lower. So even here at 9:30, when we start going up, you watch what happens above these relative equal highs. You see? Fail to displace above them, fail to displace above them, fail to displace above them. 10 o'clock, your bell should be ringing here. Prepare for bearish delivery. Price goes down, one more attempt, 1140, launch macro, goes down all the way until 130. Beautiful. And then 130, price starts going up again. So yeah, it's not easy price action here, but as I said, this thing here, the midnight range, gives you a framework of the initial manipulation, if you want, of the day. Open high, low and close, or open low, high and close. This is what you want to be using. Okay. One last example here where we didn't have any manipulation up the entire day. But guess what? This was Monday, 10th of March. It's a no news day. During no news days, Michael always says, first of all, we are within the new week opening gap, forgot to mention. But during no news Mondays, there is not a lot of room for manipulation because the volume is just not there. Okay. This is what Michael is teaching in his lectures. And on no news Mondays, usually you will want to position yourself before the 9:30 open, because 9:30 will be more of a higher higher resistance liquidity run. It's going to be a little bit more difficult, usually, not always, but a little bit more difficult to find setups. So ideally you want to find your setup between 7 and 9, and then just position yourself and ride the Monday for the rest of the day, or up until around 1:30. All right, so these were several examples. So go ahead, backtest this. It's very powerful. It gives a lot of framework. It gives a framework to trade London, but it also gives framework to trade New York. Of course, you have to consider other factors such as news, such as what is the daily profile. Is it going to be a large range day or a small range day? Things like that. Is there high impact news such as NFP or CPI or FOMC, which will invite some sort of manipulation? But other than that, most of the time it works very, very well. It gives a very good framework of how price will deliver. If you can blend that with other concepts that Michael teaches, I think this will help you a lot with your bias. Yeah. Most of all, you also want to look always for relative equal highs, relative equal lows to be attacked after the manipulation is completed. Okay, and the reversal is happening. Anyway, I hope you like this one. I tried to be short, for sure shorter than Michael. Gave you several examples of it as well. So until I speak to you next time.